Good afternoon. Good afternoon, everyone. And we are back. Everything's right with the world. Oh my goodness. Okay, well, you wanted some volatility. We got it. We got the spike. Oh, and it was because of the Trump tweet. Oh, it's because of the Trump tweet last night. Oh, the market is crooked. Of course it's crooked. We always know it was crooked. Don't let them mess with your head. Don't. Don't listen to it. Don't pay any attention to it. Our job as traders is to get in here and to trade the markets and extract cash flow from the money flow. That's it. That's it. So let's take a look at what's going on here. Um, by request by one of our members, they wanted to see the 60-minute VIX on here. So I did put the 60-minute up. The VIX is still trending up on the hour. So this market is not out of the woods yet. I know it's never going down and yada yada yada. It did go down. It went down in a hurry, right? Very pretty precipitously. It wiped out a whole bunch of people. Not us. Hopefully not you. When we look at the VIX, at least let's look at it on a 5 minute. Let's start there, right? But on a 5 minute VIX at 11:30, it starts trending down at 11:30. The 5 minute, right? Now, there have been earlier trades here. There's been quite a few trades, right? With all this volatility now injected, probably deliberately, they do this. Our members know this. We had what we call a volatility squeeze going on for several days. And what that meant was it was going to be the start of something. We were going to get a violent move. We got that squeeze. Not a short squeeze, but a squeeze. And we thought that would relieve itself to the upside. If the VIX goes up, we're going to get a sharp break in the market. That's what we got. Associated with every sell-off or any kind of bearish activity, there always is this noise that comes with it. Never has noise going up, right? Everything's right with the world. All right, so let's go through and look at the 5 minute at 11:20. If you took that trade, pretty easy to do right now. You're up $600. 11:25, 800. 9:35 on the Dow, 775. 8:45, 970. Check out gold. Check out gold. Right. 12:15. 12? Are you kidding? No. No, that's from, excuse me, that is from the 10th. That's on Friday. Long gold. Still long. 12 grand. 12 grand. You got 10 of them, you're up 120 grand. Gold. How about silver? Silver is from today at 8:15, 4,200. Now, gold is breaking out into new high ground. And most likely going higher, right? Now, there will be pullbacks, just as there were on the other day. Not much. And this thing could go parabolic. What I mean by that is you could see a run in gold. You've got to be prepared for this. So hopefully nobody is short gold, right? If you are, you better be measured in milliseconds. That could go to 4,500, 5,000 in weeks. Boom, boom, boom. Not unusual at all to see gold do this. And it could do it for the next 5, 6. It'll be over before you know it. They'll just clean them all out. Silver is getting ready to break its 40-year high at around 52. And it could capable of doing the same thing. And we've been saying this since silver was underneath 25, that silver could go, once it clears this 52 area, go to 75, go to 100. Hell, it could go to 200. I mean, we're in la la land here as far as valuations and everything. But it really, please understand, right? Please, it doesn't matter to us as traders. I don't care how high the Nasdaq goes. I don't care how high the ES goes or how low a market goes. You have to kind of let go of that. We're traders. We're going to trade the action, extract the money flow, and at the moment, collect these things dollars. Now, when the federal government starts accepting Bitcoin or a cryptocurrency to pay taxes, then I might start accumulating some of that. But until then, nah, it's just another asset to buy and sell. All right. The reason why we all have to, the focus is on dollars is because that's what we have to do to pay our taxes. That's the game. That's that's how governments create currencies and whatnot. You got to pay the tax. You got to pay them in that currency. One of the ways. Now the other day too, we got that violent move. When we're trading intraday, trying, hopefully nobody got hurt on this, although I know people got hurt, right? Hopefully none of our members got hurt. This is one of the things you can learn to become a trader in a very short period of time. I'm talking like 15 to 20 trades. However, um, it is important that you, and I'm talking me here, also be humble, mindful of what the market is capable of doing. And it's capable of doing some crazy ass shit. I think it takes about 5 years to not to become a trader, a good trader, but it takes about 5 years to see a lot of the things that you need to see. And even then, there might be some things that, still shock you. Like one of the things, I mean, I never thought that oil could, go negative, back a year or two ago. It did. So it can always do some crazy things. Um, when the volatility slows down, and we're incremental, and it usually is up, right? So when the volatility comes in, and then something is going up and going up and going up, and gets real boring, and Bagadoni does a nightly video, sounds like a broken record, because it's the same thing, just melting up, they call it. And I will say to everybody, please, patience, discipline, stay, aim small, miss small, and not to increase your leverage thinking that all is calm, because it isn't. It never is, right? It may look calm. It may appear to be calm. It may, and you'll be doing something and something, and what they do, or what the market has a tendency to do, it can lull everyone into a false sense of security. And new traders, that what they begin doing is, selling puts, naked puts. Um, they start increasing their leverage. They start going after, doubles and triple ETFs, with relatively small accounts. And then what happens is you get a day like Friday where there's a market crack for whatever reasons. And maybe it was the tweet, maybe it wasn't. It doesn't even matter, right? The market, there was a crack, and we could see it shaping up, right? And we were together with you. If anyone wants to go back to the live session on Friday, it was what it was like around 11:15, 11:20, and we had to react pretty quickly. It moved pretty quick. Um, that's unusual, right? Doesn't usually, and and the comparison I make is like, the only way I can think of this is, and especially when you're trading intraday, maybe you have a slide underneath a microscope, right? And you're looking at whatever's on the slide. And whatever it is, floating around, moving around, and you have a really nice visualization of it, and you're trading it, for instance, right? So you're on your charts, and you may have sized them like really small because the movement has been, very small. So you've really tightened it up, and you get a little lackadaisical. You're like, okay, well, I'm going to put this trade on, and I'm going to go to the mailbox, and I don't have my brakes on it, or I'm going to go get lunch, and then you come back, and it's a shit mess because you didn't have stops, you didn't have brakes, you didn't have the program on. Maybe the market moved so fast the program didn't trigger, right? On Friday, by the way, it moved so fast that which we're still exploring. The trade didn't go in, so we had to put it in manually, right? It probably cost me a grand or two, um, but we got it on. Um, so when you have a microscope and you're looking at a slide, for instance, and somebody bumps your elbow or the room shakes, suddenly, what you were looking at that looked very orderly, it becomes so ragged you can't even discern it. It's just mush. It's just you can't even see it. So now the volatility is up, right? And so you need to adjust. And you may not give up on what it ever it was you were doing, especially if it was successful. But hopefully you didn't get burned. But you have to, in our view, you may have to slow the view down or back up and change the resolution so that you can trade it effectively. Now, usually when we see something like this, it's usually not a one-off. So when a market, and usually markets don't, they just don't crash out like in one day. They can crack like it did. That can happen, and it did happen. Um, but if anyone was thinking like, okay, we're going to get 5 more days of that, not off of, unless there's something discerning. But then also this short squeeze that goes on. This also is normal. This is not the sign of a bull market. This is the sign. I can just tell you this, not from 5 years of watching markets, but a long time, decades. This is the sign of the death throes of a bull. It is. Now, I'm not saying it's going to be tomorrow. I'm not saying it's next week. I'm not, we're going to go in and take a look at some things, but it is the market of me of the death throes. And I don't think we'll be back. I mean, we can go take a look. Maybe I don't know if we're going to close over those highs again. I kind of doubt it, but whatever happened on Friday and why, I don't think it was attributable to the Trump tweet. But people can believe what they want. But I don't think that's a one-off. We shall see. It may be, a few more weeks from now. You see the other leg. But we still have very dry tender. Gold and silver are doing something that is going to be very disconcerting to these markets. And but it's running like a sob. So let's go take a look. Let's take a look at the VIX. I'm going to change this. Let's change the VIX to a daily time frame. Let's see what we got. So the VIX on a daily is still at 90. Still at 90. She's trending back. She was much, much higher. She was in euphoria, meaning the VIX, the fear gauge was, whew, they got really, really fearful really, really fast. And that's the margin. Not necessarily just in futures, but the borrowing of money that people don't have to play, large bets that they're not equipped or trained to do, and they just take them out. But we still have it at 90. Let's go look at the ES. Where is this? Okay, so significant bounce, but we're just here at 30. Um, the market isn't as euphoric as you think it is. Looking at the numbers here, I mean, it's certainly a sizable bounce because if the what we would want to see is the market, down in here. So we have some divergence. Um, what we would want to see is the market down here. You have to kind of reverse your thinking down here, in this area, threatening to go into panic sell. This is stubbornly staying here. So I don't think, we start getting over a 67.29, maybe, but this thing is the VIX is gonna have to come in, and it isn't right now. It's come off of euphoria. So I'm sorry, Gracie, but I'm thinking more that this is just a dead cat bounce. And now, how can I say maybe a dead cat is a little too strong because it's been a bull market, but I do think it's in its death. I think it's in its death throes. Death throes. Let's look at the Nasdaq on a daily. Wasn't panic, a pretty good bounce, but still not above its mean. Close, but not quite. In particular on a closing basis. So we'll put the VIX back. I'm going to put this back to an hour. Let's see what the hourlies are doing here. So pretty good bounce. It's still a short on the hourly, but it's ripping against the short. And if you took it long, that was at 11 a.m. on the hour, so would have been bouncing up. That's kind of weird. That's on the 10th. Yep. So that would have had a significant drawdown to say the least. No, excuse me. It's short. I'm like, how could that be long? So I'm sorry, I was looking here. I confused myself there for a minute. It went short at 11 a.m. on Friday, as everything did, and would have been up much, much more. It has countered back, but that short is still on the hour. Let's put the NQ on an hourly, probably the same thing. And it went short on Friday. It went short here, was up tremendously, and of course it's counted back and is now actually underwater. Right? So that's why you want to capture, as a trader, we've got to capture these moves, right? So we captured, the move on Friday, and it paid us what about 3,100, 3,200. We left a lot of money on the table. That's just fine. You have to come to you can't get it all. You can't. Every trade can't be perfect. That you get the maximum profit in the least drawdown. We're playing for the middle, and we're always playing, a little Katie by the door. So we don't want to get run over by that sort of thing. But I'll put this back to a 5. I'll let you guys watch here in the middle part of the day. Um, I think this is normal action considering what happened, and this has been the tendency. I do want to see where these markets roll to tomorrow afternoon, but it's a significant little bounce, and but I still think it's problematic for gold and silver doing what they're doing, and now what you have happening is the retail crowd is they're now coming in. They're now they're buying gold. Now they're buying silver. Where the hell they been? And now I got to get in the Nasdaq. So they're coming in. Also, another sign of a top, but it can take weeks or months for this to run its course. And every time when the big break comes and stays and comes, it takes the retail crowd out. I mean, it will take them out for a decade or longer. It's brutal the way they play this. But we have still on these markets, I describe it as very, very dry tender still. So any questions, let us know. We'll let you watch. And if you want me to plug in any of your markets, let me know. And if you have a long only portfolio and you've got huge profits, kids, you do what you want. You absolutely do what you want. And you listen to whoever you want. You want to listen to your broker, you go right ahead. But I'm going to tell you something. If you are not taking 10, 20, 30% off the top and booking these profits, I think you need a saliva test. It's a little, you're getting little warnings, you're getting little shocks. But, you know, there's still plenty of upside potentially here. There still is this, but you're playing a very, if you are, 5, 10, 15 years out from retirement and you got a sizable portfolio and it's all in, these AI stocks, and if you're in the S&P, it is in those, right? I want to say like 35 or 40% of the S&P is being reflected by like 7 or 8 these AI stocks. Man, I got to tell you, it's going to be a bloody mess when the plug gets pulled. So just be aware. And there are things you can do, with options and protect. Um, these positions in the stock market, they're not certificates of deposit. You don't put your 10 grand in and get, guaranteed, 30% a year. I know the last couple of years that's kind of what the market has given folks, but that's not going to continue. And when it pulls back and takes that froth out, boy, you don't want to be the guy who just put it all in, because they will take it away, right? So, but this is your opportunity to see who we are, what we're about, what we're looking at. Oh, even last week with everything going on, and we had a very busy week, great week. Thank you for we got a number of new folks, new members. Q schools going on. There was also the CME challenge. We didn't have a chance to really work it the way we would have liked. It's not automated, so it's cumbersome and it takes a lot of time. But there were 2,510 registrants. When it was all said and done on that challenge for last week, Sunday to Friday, we finished. And hats off to the people who, won. I'm not just in any way, shape, or form. Probably teams of people because they really worked it. We finished at 138 out of that number, so top 5%. But we didn't get any rewards for it. Um, and the CME challenge is one thing. One day I'd like to have the time to just work it all week, but it does take quite a bit of time. The payout is 2,500. It would be bragging rights, I suppose, but we can't trade it. We have to go to their platform and put every individual trade in mechanically, so it takes a tremendous amount of time, and I I don't have that kind of time to give to it. But we've done all right in the past. It's not the high. We've done much better. The best we've done, we finished on one of them, number 7, and that would be prize money today. They've widened it, and then another time we finished 20 out of a similar number. There's about 2,500, 3,000, and then there are a couple of others that we didn't. I had hoped to be what I had hoped to do is position us so that we get in the top 10 on the last couple of days, and then stay up around the clock and try to work it to win it. But when you're 138, it was too far to catch, right? They had some folks that the kitty was 25,000. We finished, I think, at 31 or 32,000, but they had some people that doubled. They took it to 50 grand. So it's pretty difficult to catch them. The good news is when you're trading, you don't have to compete with anybody, right? You don't have to compete with me. You don't have to compete with anybody. You just got to get your money out. I can't work out how these guys in the challenge make so much off micros. Must be algo. No, you can do pretty well with the micros. You can do very well. Um, but there were a few that had quite a few trades, like 150 some odd trades. That kind of tells me that could be a college group or somebody, or some group or some firm or something that trying to go for the bragging right. That's quite a few trades, mechanical trades for one person. But if they did it, hey, my hat's off to them, to be in the top 10. But you can do pretty well still with now, you're not going to do it with one micro, right? And that's the other thing. Those CME challenges do. There's a couple of things that are a little squirrely about them, so just be aware. One, you only make money by being in the top 10 or 15 now. They've expanded it. So, and it is CME bucks. The platform is legit. The CME bucks is legit, but it is CME bucks. And so people are playing with the maximum leverage they can get to win. You have to. So you've got to come in with absolute maximum leverage. And then there's another piece to that that I think is a weakness, and we don't do that, right? We don't do that day in and day out, and we don't suggest anybody do it. The other part of it is they don't have margin calls. They don't have a margin call. So, you know, that's a little, you know. And so there's an aspect to the CME challenges that I don't even really like. I would rather, but they're not going to do it, right? They want, just, hey, somebody took 25 to 50. What I would rather they do, but they're not, is grade everybody on a profit factor, right? We probably blew them away on our profit factor. Our profit factor, well, I can tell you, our profit factor was probably, oh God, um, I can tell you, because we didn't have many trades. I tell you, so we netted, like, I'm going to say about 6 grand, and our profit factor was like, at, in the neighborhood of 600. We made upwards of $600 for every dollar we expended. I don't know what the profit factor was for it. They don't keep track of it. That's how it should be graded. So they should incorporate margin calls, and they should grade it based on profit factor. And then, quite frankly, they would be doing a much better service educating people on how to trade and everything, but that's not the purpose of it. So just know that. Makes sense? It just isn't. It is what it is. And most of the people, probably out of the 2,500 that sign up, there's probably like 50 that understand even what a profit factor is. So, and all those people who got blown out on Friday, not with margin, not with futures necessarily, but this Bitcoin nonsense and the crypto nonsense. I mean, they just don't know what they don't know, and they're not interested in learning either, which is fine. They're just not. They're just not. I'm a boomer, and that's fine. I don't even, you know, those people are never gonna call me. I mean, they got it all figured out. They're listening to that guy on the Twitter sphere. What's his name? Nate. I gotta find out his name. Nate something. He smokes the big cigars. And he talks a big game. And in his videos, he's got the cars and the women, and you know, he what's he doing there? He's appealing to the crypto bros. And he's full of shit. Um, but that's okay. At some point, at some point in your trading life, you are either going to grow up. I mean this not here, not you guys, not you, but them. They're either going to grow up and learn, or they're not, and they will be out, and they will be angry, they will be pissed, they will, it's corrupt and everything. It is, but wake up. It's been this way, and that's what will happen. What is different today, though, than back in the 80s and 90s, and I'm that old, right? I'm an old boomer. Um, we, at least here, we would ask people, we would talk to people to learn. Boy, I hate to be generational here. I mean, we got a lot of young people that are very mature for their age, and want to learn from other folks who have, learned a few things. But by and large, especially in the crypto community that I find, they got it all figured out. They got it out. They figured it out. And I got news for you. They want to say that, like, all the dollar is trash. The dollar's been rising, people. That's one of the reasons why we had the crack that we had. The dollar was rising. Um, the dollar bottomed, back under the first term of Obama. You know, but you know, they've just discovered, in the last 5 or 10 years. I mean, this whole game about currencies and everything else. I mean, this has been around for centuries, centuries. um, and it is a game, and you either learn to play the game or they will, um, they'll they'll take you'll take you apart. Not even if you're in the market, right? Like, I'll hear some people sometimes say, they're not traders, like, well, I'm not in the market. That's too risky. I got my cash. Well, you can go broke holding cash too, right? Because cash is just another asset, and they can erode the value of it. And they force you into the game. They force you into the cash game, like you say, because you got to pay your taxes. So you have to collect cash at some level. You have to because you got to pay your taxes. They say when they start saying that people can pay their taxes with Bitcoin or Ethereum, then I might start paying attention to those assets a little more closely. And I'm not saying that you can't make a fortune off of crypto or off of a bubble. You absolutely can. You can. You absolutely can. But you gotta know that it is it is a bubble, and you have to capture and hold ground. You've got to capture the profit. You've got to lock it in. Now, over the weekend, I did see, you probably saw it too. Now, I don't know how much of this shit is real or not. So you got to kind of take it with a grain of salt. Although they say it was real, that some guy in Ukraine who had millions and millions of value in crypto, we get the move that we got, which was abrupt, but he winds up, walking out of the building and blowing his head off. That's awful to think of. Trading 101, you don't ever use the kind of leverage that kind of a move could wipe you out. I saw another guy, and he showed, presumably true, but I don't know. But I'm sure there were cases. I mean, we know that accounts got closed. I mean, that's kind of, semi-public. That that his account went from like 15 million down to 5. And you might say, well, that's a high class problem. But when you have 15 million in your account and then you have 5, let me tell you something. It hurts. It's going to hurt. It's going to really hurt. Um, so there was a lot of pain. There was a lot of hurt. And what we were saying is that, when it comes particularly on the crypto side, if you wanted to hodl your Bitcoins, fine, hodl them. Put them down in the basement, put them in the corner, put them in the safe. Of course, there's nothing there, but you can put pieces of paper in there and say, there they are. You put your lockbox and your lockbox in the safe and all that. Put them in there and hodl it. But don't put all your assets in there, and have enough assets whereby you can come into the futures market and hedge. Trust me, Michael Saylor and MicroStrategy, they're hedging. They're not telling anybody. Buffett hedges. They all hedge, and they all use options and futures to do it. They have pros doing it, but they don't have the time, they don't have the interest, and they know that the audience of, the 12, 1,500 people that pay them thousands of dollars, thousands, to go to these conferences in Miami and in San Diego and in Paris, and they got all the, the crypto girls and the Cosmos, and they're all talking about how rich they're gonna get and everything else, and they don't teach you shit, they're charging you, 10 grand a ticket, um, and you don't learn anything. And then when the brick comes through the window of your account, and then like, well, you couldn't have done that. You could have known. They got all the answers for you. I gotta believe that people that are doing that know instinctively that there's something wrong. And I'm gonna be the first one to tell you, kids, just trust the little hairs on the back of your neck. Trust your instincts, right? Trust them. Be skeptical. I'm extremely skeptical. I'm not suggesting everyone do this. I'm not. I'm not making any claims. Our members work very, very hard at this. Very hard. They put in a lot of time. They put in a lot of effort. They're putting their capital at risk. They have to come to grips with a whole bunch of things, including, them learning about themselves, learning about the markets. Um, I'm not suggesting that, you get Swing Machine up and you're automatically going to be printing money, although there are times when it's going to feel like that. What Swing Machine can do, and Swing Machine is it's our flagship product, but it's one of about 70 different tools that we use right now. So there's a lot of different tools, and you can mix and match. But the nice thing about Swing Machine is, for those of you that didn't see, we were up live, right? And I was talking about how quiet the market was, and on a Friday, right? It was about 11 o'clock. It was right about that time. And we were affecting. I did a couple little mechanical trades, and we were drawing down. We had a little drawdown, and then Swing Machine went boom. It just lit up. And I even commented like, "Whoa!" Caught my eye. And go back and listen. I mean, go back to that time frame. The video is still there. It was live. And the first thing I looked at is I didn't have the position. For some reason, maybe the order moved so fast that the trade didn't go in. But I had enough experience that I've had so many hours of watching Swing Machine, and I even said, I don't know what the problem is. I don't know what it is. I don't have time. But boom, we get the trade on. And then we went from there and we booked the profit. And did we get it all? Nope. But we made a very nice day, and it was icing on the cake for a very nice week. And wasn't trying to do anything. And then we found out a little bit later. But you can go and see that. What Swing Machine can do, and you can augment whatever it is you're doing, right? So if you're doing something else, you might be doing something else that we're not doing, or that none of our members are doing. There's a lot of different ways to trade, and you might be having success with that. And if you are, keep doing it. I think, though, if you have Swing Machine up while you're doing whatever else you're doing, Swing Machine you can literally see, and you can see all the buying that's going on right now, right? It's all green. You literally see the buying coming in, and you can see the selling, or you can see the buying beginning to slow down. You can see the chop, and then you can begin to see it sell down too. You literally see it's like a wave. It kind of rolls in and rolls out. Swing Machine can help you to stay out. Like if you have it in your mind that you want to sell, well then you're not selling right now. There's no trades here right now. So just relax. There's none. And you wouldn't want to be selling gold. Or you wouldn't want to be selling silver, right? There's just no trades here. So it's very, very good at keeping you out. If you went long gold on Friday at 215 and you're up, still 12 grand, and you're doing it from a 5 minute, you still don't have a reason to come out. You don't. Mm-mm. Nope. And so, now you might take the 12 grand. If you did it with a micro, you're probably up 1200. Um, what I don't know, and we never know, that position might be up 20 grand by the end of the day. I don't know. Never know. You never know. Now, if you put on two of them or 10 of them and you're up 120 grand, yeah, you probably, I think, the prudent thing would be to, at least take half off, and pocket half of it, and then kind of, manage them from there. But that gets into, money management. We do money manage. It's just that we don't trade the money, though, purely, right? When I like put a trade on, oh, I made $500. Woo, take it up. Woo, honey, I made $500. No, no, that wouldn't be good, right? If you're doing that, you're trading greed and fear, and you will lose. Just a matter of time. And you're gonna have a crappy trading life. It's gonna be very emotional. So you got to learn to not do that. And for those that want these tools on their desktop, we have the Q School, and I'm going to spend at least 3 weeks, at least 3 weeks with you, for quite a few hours trying to help you overcome that. Because you do need to, if you're going to do this for a living, you need to overcome that. You do. You do. And I'm going to arm wrestle you for the right, though, to tell you that I am the most ignorant person in this market today. I know nothing about crypto. I know nothing about gold and silver. I know nothing. I will arm wrestle you for that right because I want to be able to go left or right, and I don't want to be trying to be right. I know. And no ego in this. There's no time for it. There's no room for it. So I'm a mature person, and we have very young people that are very mature that are doing extremely well, and some are doing much better than us. Nothing wrong with that too. This isn't a zero-sum game. Their success doesn't take anything away from my success. My success doesn't take away from yours, right? Although there are retail people out there that think like, oh man, the market stole my money. Those nasty speculators, they stole my money. No, nothing could be further from the truth. Now, those that got reckless and just threw their money into the high and threw it into whatever, they're the ones that get spanked. That's the way of the world. That's just the way it plays out. But I'm happy if you have a market or you have a stock as we sit here today, and I can only be with you for not too much longer, probably about 1:15. I am more than happy to plug that into Swing Machine on an interval of your choosing, and we can do it real time. You just tell me in the little chat what stock you want to look at or what market and what interval. We can look at several intervals if you want, and we'll see how Swing Machine will be positioned right here, right now. Now you're on a 40-second delay, but otherwise it's real time. And then ask yourself, well, if I had it and I took action. Now you got to take action, right? I mean, you got to learn to take action. Um, so I'll wait. Anybody's got any questions? Let me know. I won't ramble on. We'll let you watch. Okay, everyone. I don't see any questions, but you can see here, you can see, please don't short anything, right? Don't take these trades, right? Um, it won't help you in the long run. But you could see we were solidly green, right? And then we started 5 minutes ago. We stopped pulling back on the ES. 5 minutes at 116. It's $250. 4 minutes ago, 295. 7 minutes ago, 135. 7 minutes ago, 40 or 50, 22, 60. 17 minutes, there's 1,000 on silver. That fast, right? Right now, this type of trade is what type of trade? It is just a counter move to the 5. However, if later today the 5 minute rolls over and turns completely red and starts selling down, we will see it. Our members will see it. And if they're watching something else, hopefully it's something that complements their view to give them the confidence to take action, and or a program that is also picking up. And all of this can be programmed. We are working on some radical new ideas and concepts around using these radars. We use these radars for a lot of different things too, folks. We use them for options, a lot of different stuff. I'm Bagger Don. This is Stock Market Caddy. We need to say goodbye. We got to get to work. It's going to be a busy week. We wish you the best. Be sure to push the like buttons. We appreciate that. Helps us with the algos. We appreciate the retweets. If you want to know when we punch up again next, if you push that little notification bell, you'll get a little announcement saying, "Hey, Bagger's gone live here," to give you a view. We wish you the best. Have a great day and a great rest of the week, and we'll see you a little bit later in the week. Have fun.